Hello everyone and welcome back to the MSC Academy. So for today I'm going to be focusing on one specific topic, and that is how to trade Forex. So just to introduce myself, I have been trading for close to over a decade now, and I've also had the privilege of being able to teach students in over 30 countries around the world, teaching them about the knowledge base of financial trading, specifically relating to Forex, commodities, stocks, and I'm getting into cryptocurrencies, but I will say I was definitely late to the game. Should any of you want to learn more about the company or about financial trading, please make sure to jump in on MSC Academy YouTube page. As you'll see over here, there are tons of videos that you can make use of. There is a lot of educational content that you can learn from, so jump in there, and believe me, you're not going to run out of content to learn. For this video, I'm going to be using the MetaTrader software. This is called MetaTrader 5. Now you might be using some other type of software, but we are going to be making use of this software. Most importantly, make sure you have some note-taking devices. Simple, just the notepad. I really prefer making use of this, and I really enjoy being able to write my ideas down. Have some pens, have some pencils if you like to be the John Wick style, and also some highlighters that you can just color code certain aspects of your trading plan. So for myself, really, when I began trading, this was a similar style that I made use of, and still to this day, when I am looking for trade ideas on the financial markets, I start off with a piece of paper. Now, I'm not going to share with you a lot of the more advanced techniques that we make use of in our trading academy, specifically because the students that I teach pay for that content. So we're going to give you a very standard approach, but this approach still works. Walk through this video with me that you are able to learn and grow as well. And if you have any questions, leave a comment down below and I'll make sure to answer that comment in the next session. So if you see, we're just going to jump onto the Euro US dollar charts over here. I'm going to go on to cleaning up this template and basically just having a standard white template, a white background with a simple design for the candlesticks. Bullish is green, bearish is red. If you don't know anything about candlesticks, I tell you what, I'll give you something completely free of charge. It is called my candlestick PDF. So if even candlesticks are difficult for you to understand, that's fine. It takes some time to get used to. What you can do is email study@mse.academy and just in the subject line saying, I want your candlestick guide. That's all you got to send to me, and I'll send the candlestick guide straight out to you. And that will teach you a bit more about what candlesticks are, because they are extremely important to be able to understand. So for this chart, I'm going to be starting out on the weekly for the Euro US dollar. So I'm just going to quickly get some headings set up. So for this, the live trader talk, this is going to be live trader talk number 1. And we're going to be focusing on Euro US dollar. So like I said, most traded currency in the world, or most traded currency pair in the world. That's why we're going to get started over here. So just to take a look at the weekly, we tend to do that to make sure we have an overall view of what the market is looking like. That is also extremely important, so that you know what the overall trend is. So whether you're trading on the hourly, daily, or even the 30-minute chart, you at least know what the long-term trend is. So simply put, where I like to start is setting up my levels. So I'll zoom out all the way over here, and then what I'll basically make use of is the horizontal lines, and I will start setting up going from the previous high. What I'm going to do over here is you can just, once you've got a line, you just say control and click and drag. So there is our previous high currently. And then what I'll do is I'll drag it down to the next support or resistance level. And then I will continue to do this just so that I can establish a general understanding of where the highs and lows are because the highs and lows are extremely important to make use of. Now you can see all the way up here on the sides. There we go, come on. Give it to me. I want a second bar. There we go. Okay. So for making use of this, I'm going to just basically set up my levels, and then that will give me a pretty good understanding of where my support and resistance levels are going to be. Where am I missing one? I would say there's a level roundabout over here. So with support and resistance, that is really going to be where the horizontal levels are, support being where price has met on the lower end and bounced or retraced from that level, and resistance is going to be at the top. So think of it as resistance is top and support is at the bottom. Support is underneath where the price is going to be. Now, establishing support and resistance zones is important because why? That's where price will often meet a level that it might not move beyond, and it will bounce from that level. That's what we tend to call a retracement, or some people call it a bounce. Now, setting up these support and resistance levels are important because it can help you establish where your market might land up moving to in the future. Now, support and resistance can be sometimes an exact defined level, and sometimes price might move slightly beyond it or not reach that level and then begin to retrace. Now, this can be various different reasons why it will happen. Sometimes it's because the market is hunting for stop losses, meaning a lot of people will find the most recent resistance level and put their stop loss just above it. Somehow, it's going to take me too long to explain, but the market will hunt for those stop losses and will break sometimes just beyond that resistance level, take out all of the market stop losses, and then retrace. Now, professional traders know this as well. So often professional traders will enter their entry point or their entry orders just beyond the support or the resistance levels. So it's important to remember that if you're setting a support or resistance, sometimes there's a threshold. Now, perfect example of this, let me just quickly throw up my drawing tools. You can see right over here, here is a resistance level where the market has moved to, and here is a support level. Now, you can see this is what you'd call a zone. So the market is meeting this zone over here, and it is a very tight area where the market has moved to. Now, in some cases, the market has used it as a support, and in some cases, it's used it as a resistance. But now it's not meeting that exact level, it's meeting somewhere within that region. So please make sure to remember this. So going back to what we were discussing, for all intents and purposes to try and save time, Euro US dollar support and resistance, or what I call it S and R. So our S and R levels, what are the numbers for our S and R levels? So our recent high, what is that going to be? 1.18. So what I say is, number one, most recent is 1.18, and then I'll say resistance. That at least makes me remember that my previous high is a resistance, or the previous level is a resistance. Now going back to the previous level, you can see the previous level over here is sitting around about 1.02. So 1.02 is my last support level. So I'll say here support. So it's just important to input this information and this data, that at least you've considered it. That's also why the important part of writing down, why there is an important part of writing things down, is because then it's banking that information that you're processing. You're not just saying things to yourself and that information is disappearing. Now, going beyond that, your support and resistance levels, where's going to be your next level? Now, 1.12 is one of the next levels over here. So you can see that level, I would say maybe that's something I missed. 1.12 is definitely support number 2. So I'm just going to say here 1.12 support as level 2. So our second level and then third level, I would say, is 1.02, which is a support level. Now, going beyond that, where would you want to focus your attention a bit more? Now, trends is going to be an important part. So a trend is where the market is moving to. Now, what we can see over here is the market is, of course, bullish. So there has definitely been a bull run. So what you can say here is Euro USD has been bullish on the weekly. And it is currently meeting historic resistance. Now, it's important to realize this, that the market can go one of two ways. It can either continue moving higher or it can continue moving lower. So what I would say is continuation. So if the market continues or if it pivots. So pivots meaning the market will meet this level and pull back. What's the other alternate? The market could continue moving. What's the third point? It could move into a range. A range meaning the market could trade horizontally. Now, if this market were to move into continuation, what is the next target price that market could move to? Continuation, you can see the next level beyond it is 1.224. So 1.224. If the market pivots, where is the next stop zone that, or the target zone that it could move back to would be 1.12. So let me just put up my drawing tools here so we all are on the same page. So target zone for continuation of this trend could be what? Market moving all the way from this point up to this level over here. So what are we going to call that? We're going to call that the 1.22 zone. Now, if the market pivots, where could that market move to? That market could move to somewhere around here, the 1.12 zone. Now, if that market doesn't move lower, where could it move to? It could move horizontally and it could move within that range. So now you know the three possible outcomes are those prices. So if the market pivots, our next target price could be 1.12. And then what I'm going to say here is moving to the next prices for those three. So the range could be 1.16. So 1.16 is effectively the current price that it's in. Now, let's take a look. What could be the next continuation if it moves beyond this 1.12 zone? That's, sorry, not the 1.12, the 1.22 zone. Okay, so let's just zoom in a little bit more here. If we see the market moving beyond this point, which on a weekly chart I highly doubt it's going to move to that level, we could see price moving either to 1.12 or we could see price continuing higher. I see I've missed a stop zone over here. Let me just add this one in as well. You can see here there is historic support over here. So we could see the market moving to 1.27. Let me just quickly remove these. So you could see the market moving to 1.27 as a second continuation target. So I'm going to say here 1.27. Or you could see the market, if it pivots and it moves beyond 1.12, where could be the next point that it moves to? It could move to 1.048. So as a second pivot, I'm going to just say here 1.048. So what we're doing here is we are being able to write down all the possible outcomes for being able to do this test. So you're checking for yourself, where could the market possibly move to? It's important that you keep an open mind when you're analyzing a financial asset on a trading chart. Is yes, you're going to jump on the chart and you're going to say, ha, I see something, and I believe this market is going to move to that point. But what does that normally trigger? It's something called CB, confirmation bias. So confirmation bias means you have an idea of where you believe the market's going to move to, and you're determined to come up with a plan that shows the market's going to move to that point. What we're doing here is we're just taking a step back and saying, hey, let's look at all the different levels, the support and resistance levels, and let's just input what are the possible outcomes. So what are the possible outcomes of a financial asset? It's either the price is going to go up, the price is going to go down, or the price is going to move horizontally. We now have our three target prices for where the market could go. So we have the continuation price, we have the pivot price, and the range price would mean it could move between those two prices of 1.22 and 1.12, or it's going to trade slightly tighter in the range of 1.16. So you got to be able to be flexible with your outcome or with your analysis, so that you don't become biased about what you believe the outcome is going to be. So that is our SNR on the weekly. It's important to remember that. Now, in terms of what we're going to be moving on beyond this is to take a look at the daily. So now I'm going to just write down here the daily, and then what we're going to do here is we're just going to clear this chart out, take this trend line away, and we're going to go into the daily now. So it's important that we always start in the larger time frame to see what the larger time frame is doing, and then start moving down into the smaller time frames that we can try and see what might be coming up from our analysis. So if we take a look at this position over here, you can see that the market has been making higher highs continuously and then pulling back to this trend line level. Now this trend line, you can see there's more than one trend line forming over here. So if you just hold control down and click and drag, then it will pull this market's trend line all the way across, that you'd be able to make use of it. Now it's not being very nice to me, so I'm just quickly going to draw a new one. But you can see over here, there is definitely more than one trend line showing that the price has been moving in a certain direction. And you can see over here, what I'm going to show you is that the market has been continuously obeying this. Now, if the market is trending, so what I'm going to say here is, now we've looked at support and resistance. Now what we're going to do is look at channels and trends. So a trend means something that's moving in a certain direction continuously, and a channel is a price that's been trading within a certain zone and it's stayed within that zone for a continuous period of time. That's it, folks. I want to make sure these trading videos don't go beyond half an hour. So I wanted to say thank you very much for tuning into this video. I hope you learned something. Now, key points. Beyond the trade itself, key points. What are the key points? Be organized. Make sure you have your tools that you need to be able to perform your key analysis points. Make use of something like this, highlighters, and this packet, it travels with me wherever I go. This notepad, whatever it is that I'm able to write on, I will write on it. That's standard. Okay, your trading platform, make sure your trading platform is useful and effective and clean. When you're analyzing your charts, start off with a clean chart, no indicators. Make use of your support and resistance levels. Ask questions. Do not use confirmation bias to get yourself into a position. And please, always, always make sure you have the answer before you execute the trade. It's all about sticking to the system. It's not about making money. Furthermore, please make sure to check our YouTube page out. There's so much educational content up there. If you like this video, there's definitely going to be something on the YouTube page that you can make use of that's going to help you out. Practice makes perfect. I've been doing this for over a decade and I'm still learning new things every single day. Last point, please, to all of you, if you're going to invest money in the financial markets, please appreciate the videos that I'm sharing are not investment advice. It's an educational advice only. Most importantly as well, if you are looking at investing money in a Forex trading course, in an investment service, in anything, make sure it's verified and it's reputable. If you want to know more about how to check whether these Forex entities are verified and reputable, go make use of this video here, how to spot a Forex scam. It's quite sickening to me that sadly I'm a part of an industry where there are many charlatans, there are many scammers, and sadly people get caught out every single day. So please make use of that video, and also don't contact me if you've lost money, because if you can't get your money back, I sure as hell can't get it back for you. Otherwise, thank you so much for tuning into this video. I'm going to be uploading one of these videos every day, half an hour piece of information showing you how to trade the Forex markets. And what we're going to do in the next episode is we're going to be taking a look at the indicators for this trade idea to see where that trade might end up going. So once again, thank you for tuning into this video, and I'll see you in the next one. Cheers for now.